So have you been in business or are you thinking about starting your own business soon and you're wondering, should I continue to operate or should I operate as a sole proprietor or should I go and incorporate my business? Well, in today's video, I'm going to be explaining these two terms and I'm also going to be comparing the pros and the cons of operating as a sole proprietor versus a incorporated business and some considerations. Hi, welcome to my channel. My name is Irene and I post videos explaining important accounting concepts using simple language to help business owners gain financial clarity. Make sure you hit that like and subscribe button for more. So before we get started, let's quickly define these two terms. When you are a sole proprietor, that means you and the business is one entity. All of the income and the expenses that the business generates will be reported on your personal tax return. And on the flip side, when you incorporate your business, you're essentially creating a new entity. So you and your business are two separate entities. The business income and expenses are reported on the corporation's tax return, while your personal is separate. And I just wanted to note that today's video is going to be for Canadian entrepreneurs because in Canada, we don't have S Corp, LLCs, C Corps, etc. So it's just here in Canada what we're going to be talking about today. All right, let's get started. So as a sole proprietor, one of the advantages is that it's relatively simpler. And what I mean by that is you and the business are one entity, so you just need to report one combined tax return. And because it's simpler, it's relatively more affordable because you just need to get one tax return filed between you and the business. Conversely, when you compare that to incorporating a business, when you incorporate a business, it'll cost you some money and it will also increase your compliance as well as regulations. So what I mean by that is because you and the business are two separate entities, now you have to file two tax returns, one corporate tax return and one personal tax return. And on top of that, you're gonna have to make sure that you are abiding by the filing deadlines for the two separate tax returns. Because when you're an individual sole proprietor, your year starts January 1 to December 31st. But when you incorporate, you can actually choose a fiscal year end, which is any date during the year, and that is when your year end is going to be. And on top of that, here in BC, when you incorporate a company, you will have to file an annual report every year with the province. So there's going to be a little bit of fees in that as well. And then if you need year-end financial statements prepared by a CPA, that will definitely cost you more as well versus getting your personal taxes done only. And also you're gonna have a little bit more professional fees, like legal fees as well too, when you're setting up your company, incorporating your company. So you have to seek, legal advice as well as talk to a CPA to see what kind of share structure you should have, etc. So an advantage of operating as a sole proprietor is that business losses can be applied against your personal taxable income. And let me explain that. So let's say you are employed and you have a full-time job, right? And so you decide that, hey, I'm going to go and start my own side business while having my full-time job. In that first year of your side hustle, let's say, you had to spend a lot of money because you had to get your business set up. And so in that first year, let's say you actually made a business loss. And so those losses can be used and offset against your taxable income from all your other sources, which can lead to a decreased taxes payable and can lead to potentially a refund for you personally. When you compare that to a incorporated business, all of the business losses within the corporation has to be kept or retained within the corporation. You cannot use that loss to offset your own personal taxes. You can't do that. And so the business losses get retained within the corporation for the corporation to carry forward into the future when there is a more profitable year. But you can never cross over the two, personal and corporation. So you may have noticed by now that when something is an advantage as operating as a sole proprietor, it is typically the disadvantage of being incorporated business. And so this is also true for the opposite. So now we're going to go into the cons of operating as a sole proprietor, which are technically the pros of incorporating. So one of the disadvantages of operating as a sole proprietor is unlimited liability. Because you and the business are one legal entity and there is no legal distinction, this means that if there were any litigation issues, Your personal assets may also be at risk as well, despite your personal assets may have never been used as part of the business. When you compare this to incorporation, one of the biggest advantages of incorporation is actually the limited liability. So typically shareholders are not personally liable for the debts of the company, but sometimes there are special cases. But for the most part, if there are any litigation issues, the assets at risk is typically limited to the assets that the corporation owns, not you as a shareholder. So that's one of the biggest reasons I would say people incorporate is that liability protection. It doesn't fully eliminate it, but it does reduce it significantly when compared to a sole proprietor. So another major advantage of incorporating your business is gaining access to preferential tax rates. And so in Canada, if you are a CCPC, a Canadian Controlled Private Corporation, and if you are eligible for the small business deduction, then you will gain access to a super low corporate tax rate. The basis behind that is businesses in Canada are incentivized to carry out business in Canada and to use their after-tax profits to reinvest back into those Canadian businesses so that they can stimulate the Canadian economy. So hire people for more jobs or produce services and products for Canadians. And so when you have access to the small business deduction, what that allows the corporations to gain access to is on the first $500,000 of active business income within your corporation. Here in BC, you are only taxed at 11% at the time of this recording. It depends on the province that you live in, but it's super low taxes. So that is very, very powerful tool here. And so when you compare that to a sole proprietor, if you are a sole proprietor and if you earn $500,000 of business income, you would have to report that at the highest tax bracket personally, versus at the corporation's level, you only need to pay 12% taxes on the first $500,000 of active business income. So all of that is to say it just ties back into the biggest advantages of incorporating is so that you can gain access to tax planning and tax deferral opportunities at the corporation level, right? And so how that can kind of look like is, let's say your business generates $250,000, let's say in net profit, right? And so at the corporate level, because that's active business income, that $250,000 profit is only going to get taxed at 11% here in BC at the time of this recording. And so if you, the shareholder or the owner, if you personally only need, let's say $50,000 a year to survive because your living costs are super low, what the company is going to do is they're going to issue you, the shareholder, a salary or a dividend of $50,000 in which you will then report that on your personal taxes, okay? And so when you report that on your personal taxes of $50,000, you're at the lowest personal tax bracket. And so do you see how in this situation, there's really little taxes being paid in this situation at the corporate level as well as the personal level? So basically when you incorporate and you leave the after-tax profits within the corporation and you don't use it personally, you don't need to pay tax on it until later down in the future when you actually strip the money out of the corporation for your personal life. That's when you get taxed on it. And so that's kind of what the idea of tax deferral is, right? And this is perfectly legal. This is not tax evasion. This is tax planning, tax deferral. So when you quickly compare it back to sole proprietor, in the same example, your sole proprietor business earns $250,000 business profit, right? And your living expenses still is only $50,000. Because you're a sole proprietor, all the business income gets taxed in the year that it is earned, regardless if you actually spend the money or not, right? And so do you see how in the same example, when you are flipped back to a sole proprietor, that $250,000 is going to push you up at the highest tax bracket and you have to pay tax on it in that same year that you've earned it. So another advantage of incorporating your business is that you can eventually sell your business. So when you incorporate your business, how you have ownership of the business is that you will buy shares into the corporation. And so let's say over the years you worked super, super hard and now you've made it super profitable. A lot of equity is built in it and goodwill as well too. And you're like, hey, I want to exit. I want to retire. What you could do is you could sell your shares to a interested party and hopefully you'll realize a large payout for all the hard work that you've put in. And that's just super goals, right? And so when you compare it to a sole proprietor, when you're a sole proprietor, you can't sell the business. Like, you and the business are the same thing, and nobody has shares in anything because you're like the same. And so another major advantage of incorporating your business is that you might be able to gain access to the lifetime capital gains exemption for when you go to sell your shares, assuming that your shares are qualified small business corporation shares, QSBC shares, okay? And so without getting into the nitty-gritty of things, okay, what this basically means is that in my previous example, you decide that you want to retire, you want to exit your position out of this business, and you go and find a buyer to buy your shares, and assuming that your shares are QSBC shares, then you might be able to access the lifetime capital gains exemption, which means that at the time of this recording, you can shelter $913,000 of that capital gains. Like, you don't need to pay tax on that, which is incredible, right? And so this is out of the scope of today's video, but I just wanted to throw this in there to show you all of the potential benefits down the line as well for when you incorporate, when you don't, just to have a general knowledge about this kind of stuff. I feel like today's video has been a little bit long, but I really wanted to drive home some of these points because they're kind of important and really valuable, and I try to make it as clear can be. But in summary, right, so sole proprietors, basically the pros of that is that it's relatively simple, it's relatively affordable. However, the cons of that is that there is unlimited liability. So depending on the type of business you are operating, that might pose as a very high risk, or also there's lack of tax planning and tax deferral opportunities. And then on the flip side, for incorporating your business, the pros of that is that there are reduced limited liabilities, right? And also tax planning and tax deferral strategies planning available that I briefly touched on, briefly. And then the cons of that is that it's just a little bit more expensive in terms of maintenance cost. You're gonna have to pay for lawyer fees each year. You're gonna have to pay for accounting fees each year, get your corporate tax done, corporate year-end, financial statements done, and etc. So basically, that is it. Regardless, today's video was just to bring a little bit of awareness to what is possible and some of the factors to consider. However, I still highly advise you to speak with a CPA or a lawyer in order to determine what route is best suited for you. So after watching today's video and all this talk about incorporation, you might be wondering, how do business owners get paid after incorporation? Well, lucky for you, I made this video over here where I go in detail on how business owners can get paid. I think you'll find it very helpful. Thank you so much for watching until the end of the video. I'll see you next time.